What's up, Modern Contractor TV? Teddy here. In this episode, we sit down with Tyler Martin from CFO Made Easy. Tyler is a fractional CFO who also hosts his own podcast called Profit and Grit. He's got a ton of amazing guests on his podcast. You got to go give him a listen. But in this episode, we dive into why it's important for a home service contractor to have a fractional CFO on your team. I understand you may have a bookkeeper, you may have an accountant, but you don't have a CFO, and that's what you need. Not a full-time CFO, you need a fractional CFO. So in this episode, we're going to talk about different things like where your net profit should be, what your gross profit percentage should be. We'll talk about why top-line revenue is not important. We talk about how to have hard conversations with your employees if you're overpaying them, how to restructure their compensation. It's an amazing episode. I think you get a ton of value out of it. Let's get into it.
You're listening to Modern Contractor TV, the show for home service pros who want to build real business value, scale profits, and create a company that doesn't rely on them day to day. Hosted by entrepreneur, author, and advisor Teddy Slack, a builder of multiple seven-figure service businesses. Each episode brings you real-world strategies to help you grow, systemize, and prepare for a profitable exit. Let's get into it.
Hey, Tyler, welcome to Modern Contractor TV. How's it going, man?
Hey, Teddy, great to be here. Thanks for having me.
Yeah, man, I'm super excited. We just recorded the podcast with you on your show, so I'm excited for that to come out, and I'm excited to have you on Modern Contractor TV because I think the position that you play with home service contractors is something that brings a ton of value, and a lot of contractors don't realize that they need somebody like you. So I'm excited to get into it, for sure.
Yeah, so am I. By the way, Profit and Grit, you were on my podcast. You were an awesome guest. I hope I can come close to sharing the same level of knowledge that you had.
Oh, thank you. I appreciate that. So why don't you tell the audience kind of who you are and what you do and kind of a little bit of a history of yourself?
Sure. So I'm still a CPA by trade. I still have a license. I don't do any tax compliance, but I started out my career as a CPA. I went on to build a CPA practice. I sold that. I had about 200 business clients. I sold that after about 5 years in the 6th year. And I went on to join a client of mine at the time. He was building an engineering services firm. And so I joined his company and ended up running that for 8 out of the 10 years I was there. Built that to about $25 million a year in revenue, and we sold that to a large family-owned business back in Philadelphia. And for the last 6 or 7 years, I've been doing fractional CFO work, which is like a part-time CFO. This CFO sits in the middle, is the way I like to think of it, between a CPA who does your taxes, kind of after-the-fact taxes, and then a bookkeeper who does your after-the-fact accounting, or an accounting team. And I sit in the middle where I'm thinking more looking ahead in terms of strategy and how you're managing your business from a financial side. And I now have a business called CFO Made Easy, and I do it under that umbrella. Most of my clientele is in the home service business space.
Yeah, that's awesome. And I feel like, from my clients, what I'm finding is, a lot of these contractors think, well, I have a bookkeeper, so I'm good. I have a guy that does my accounting. So what do you mean a CFO? We're not big enough for a CFO. Some of them are, maybe they're only at a couple of million, maybe they're $2, $3, $4 million in top line revenue. But what they don't realize, and this is some of the things that I talk with them, and I'm not a CFO by any means, but I talk to them about their numbers because the numbers are so important. So can you hit on that? Why it's so important for them to strategize around the numbers and not depend on the bookkeeper or the accountant for those numbers?
Yeah, so just like I kind of said earlier, and just what you basically said too, is a bookkeeper generally is thinking after the fact, and they're putting together data to give you a set of financial statements. And I think bookkeepers play a super important role. Having said that, a lot of them manage it around their own workflow. And a lot of times when they're giving your financial statements, they're a month or two after the period's closed, which means they really have no value. The financial statements are just a start of how you want to look at your business. So that they're a good historical perspective. But really, when you're trying to grow a business, if your goal is to scale and grow your business, you really should be looking ahead. That's late news if you're looking at a financial statement and making just solely your decisions off that one data source. You also should be looking at things that are more looking ahead. And some of those might be like a break-even analysis, and then factoring in what should your hourly billable rate be. That's more looking ahead. Or maybe some other common metrics or labor efficiency. We don't talk about this enough in staffing in home service business, but if you're paying someone 40 hours and they're only actually on job sites for, let's say, 40% of the time,
Yep.
that means 60% has to be baked into your rate, or else you're losing money. So that's the reason I think a CFO or someone like, whether you call them a CFO, I know you're really in tune to numbers too, so the title doesn't matter, but someone that's actually looking ahead as opposed to more of after the fact type data, which is also what a CPA does more often than not. They're doing your taxes kind of after the fact.
Yeah, no, that's my experience. And when I first got into business back in 2009, I didn't know. I mean, I went off my own. I'm like, I need a accountant, right? You just Googled, let me get a local accountant, and and then what I found though is, after a year or 2 years, what they basically do is they come in after, you said after the fact. I mean, they would show up in my office like once a quarter. And, I didn't really pay attention to numbers. I just figured, oh, the accountant's got it. The accountant's got it. But then after I went through everything I went through, I started, these numbers are really important. I really need to understand these numbers with everything from pricing to, like you said, forecasting and everything. And if you don't have your numbers dialed in, I mean, you could drive your business into the ground really fast. And I think that's what a lot of contractors do, unfortunately. They're not pricing right. So the gross margins are too thin. So they're not making enough money to pay their people the right amount of money, right? So, yeah, I mean, can you talk a little bit about how you help your clients with even maybe pricing strategies or, where their gross profit should be? And obviously every industry is different, right?
Yeah. The general rule of thumb when you talk gross profit, and I always chuckle a little bit about even when we talk about gross profit, because gross profit is kind of an art in terms of what you put in as expenses that get taken out to get you to the gross profit. Everybody kind of defines that a little bit differently. And some people define it very, very thin, and they have these incredible gross profit numbers. And then you realize, well, they're not even including maybe direct labor in that, or they're not including fuel, say, to go out to client sites, where a lot of companies will include that in cost of goods sold, which is a component of what comes out to compute gross profit. So I would say 50% is generally the rule of thumb that I would probably say with almost any business. Having said that, there's nuances in that. Definitely trying to get people towards 60, but you have to really have your pricing dialed in, because that's a big function of your gross profit. And then you really need to understand your cost around your cost of goods sold in terms of your vendor relationships and your pricing and things like that to get to 60. And it's possible, but honestly, if client's doing 50+%, I'm pretty happy, because most that come to me aren't doing 50%.
Yeah. No, I'm doing some research right now in the roofing industry. And what I'm finding is it's way different. So I came from the environmental industry. It was a very niche industry. We didn't have a lot of competition. My gross profits were high, but my overhead was really high because I had a lot of maintenance. I had millions of dollars in equipment. So it's like I had high gross profit, but then I had high maintenance and all these high expenses, where in the roofing industry, after doing some research and helping contractors in that space, they have a low gross profit margin, but their overhead is a lot lower. So that's kind of what I'm seeing. And you probably see that too, if you want to talk a little bit about that. So industry specific, because they're relying in the roofing industry on a lot of subcontractors. So how do you usually guide your clients in that industry?
Yeah, I mean, I think you have to, just to your point, you kind of have to look at the whole picture. And you're right. Some businesses are more overhead intensive, and that becomes the number that you need to manage. But generally speaking, cost of goods sold and gross profit is really the number. Is really the number you're going to look at that's going to drive the chance for profitability in your business. That's what I tend to look at first. If there's nuances where it's more overhead intensive, then yeah, sure, I look at that. My typical client's going to be in HVAC space. I do have a couple roofers too, but I would even say on that, from what I've experienced so far, it's really getting that pricing and that gross profit dialed in. And that usually will tell the story on the bottom line. Now, overhead, a lot of times by its nature, can be managed. There's just certain things you're going to obviously have to pay for. But if you're going to go out and rent a $10,000 a month office when you really don't need that nice corner office view, those are things where you kind of have to decide. You can manage overhead to some degree to squeeze out more profit if you want to.
Yeah, no, absolutely. And that's one of the things I learned after going through what I went through in all the businesses. I went in all these different directions. And then I learned, like, okay, numbers are important. Let's pay attention to stuff. And then you start really dialing down on what is absolutely necessary. Like, and you really kind of go through that, because you can bloat your overhead real easily, I feel like.
Totally.
And it's before you know, it's out of hand. And now, you need to generate a lot of work just to cover that overhead. So try to keep yourself as slim as possible. So I tell my clients, I mean, and debt. I mean, let's talk a little bit about debt, because because that's one of the reasons why I got myself in trouble. I used a balance sheet off my really good, healthy, profitable business to try to start other companies. So that debt burden now was starting to strangle the company. And when the business didn't work out, it basically took my other business down with it. So you want to talk a little bit about healthy debt and bad debt and why it's you have to pay attention to it as a business owner, right?
Yeah, it's huge. And I want to take a step back. It's the same topic, but we don't look at the big picture of debt. And that's, I think, where we get in trouble. Accountant says to you every year at the end of the year, oh yeah, you're making some profit. Let's get your taxes down. Go buy that piece of equipment. And you don't really have the cash for it because you've taken out distributions or whatever throughout the year. So you say, okay, well, I'll just finance it. And now you've got another piece of equipment and you now have to use future profits to service that debt.
Yep.
And so what ends up happening is people look at their bank account and their bank account's staying low, but their profit and loss statement is showing they're making a profit. And they're like, what's going
where's
on
the
here?
money?
How am I making? Where's the money?
Yeah.
And then you got to explain to them, well, yeah, your debt service is more than that profit. And therefore you have no cash in bank. In fact, it's going backwards. Yep. And that's a tough conversation. And so I think what my big thing I try to do with clients is really spell out, we don't stop at the P&L, because if you just stop at the P&L, you're not getting the full picture. So usually what I'll build below them is, hey, how much are you taking out of the business in draws, assuming they're an S corp? How much are you taking out? How much do you have to do in debt service on the principal? I have one client, for example, they have alimony that they pay out of the business and in their draw. And okay, let's put that as a line item. That's cash coming out of the business. And, pretty soon it goes from, and then the other big one, sounds silly, is twice a year. If you're on a weekly or a biweekly payroll, you have 3 payrolls or 5 payrolls.
Yep.
Well, a lot of businesses don't plan for that. So set a little money aside every month to prepare for that, so you don't get a cash crunch in that extra payroll month.
Yeah, no, absolutely. And talking about cash, what do you advising your clients, and what do you like to see as far as how much cash they're keeping in the account, right? Because growing up, when I learned from my father's old school, he was a bank balance accounting type of person, right? If there was money in the bank at a certain level, he was happy. If it dropped down, he got angry and it was like, we got to go find money. You know what I mean? That's basically how I was taught how to manage a company. So, and a lot of guys that's how they manage, right? It's bank balance, accounting. And so you probably get clients that come to you like that, right? So what do you advise as far as how much should be in the bank? Is it, a certain amount of expenses? What's your take on that?
The general rule of thumb is 3 to 6 months of operating expenses. I mean, that's what you probably read any book. They'll probably say that. I think it really depends on the business. I think most businesses probably have 1 to 2 months, if I'm being honest, in terms of what I see. I would sure love more cushion. It allows you, especially if you're in a scaling phase, if you're in a phase where you're kind of flat and you're like, hey, I'm really good at $5 million a year and I'm really not envisioning growing, probably having a couple months and access to a credit line is great. I mean, you probably don't need more than that. But if you're thinking about growth, adding equipment, adding people, then you should have more. You should be thinking about what could go wrong, where might I need cash, and I would fall in that 3 to 6 month range.
Yeah. And what about debt? So getting back to that again, I mean, as far as, is it a percentage of revenue that's safe? Is it a percent? Again, you're looking at the balance sheet and all that stuff. So how do you feel about debt, and how much is healthy and how much is this is a red flag here, we got too much debt?
Yeah, there are some ratios that are relate to bankability for debt, and it's called debt coverage service ratios, and that generally is about 36%. I think it depends on the business and what type of profitability it's making. I will tell you, so I tend to look at it in dollars as opposed to percent, and it's kind of what the business is doing, and because I feel like clients can understand that a little bit better. So I'll give you a real example. I have a client that services about $40,000 of debt a month, and that's just the principal service of the debt. That's not counting the interest, which comes off the P&L. And so every month they're making about somewhere between $20,000 to $30,000 in profit, but that doesn't cover the principal debt service. So when I showed them that when they first hired me, because they were getting in panic mode of cash was running out, it just hit them. It's like that. Oh, that makes total sense. No one ever explained this to me. You mean I shouldn't buy equipment every year and use up future profits to pay it? No, you probably shouldn't. And that means you might have to pay a little bit of tax. Sorry to tell you that, but that's the reality. Tax isn't necessarily a bad thing. It means you're making money. And then, so that's kind of how I like to do it. So I would say for me, it's a little more contingent upon the business and what their resources are, how much they have in bank, do they have access to credit lines, things like that. That would probably, I will tell you one thing else I want to add to this, Teddy. I've had clients come to me and they get themselves in trouble with debt because of an SBA loan and the covenants of the SBA
Oh
loan,
boy. Yeah.
and they get out of whack. And and what could happen is you would have to close your credit line because your debt ratios are too high. So you do have to look at debt if you have other forms of debt that are secured against the business or assets. So just a lot of different topics there. I don't know if that's a perfect answer,
Yeah.
but it's something that needs to be looked at closely.
Yeah, no, I 100% agree. And now that you brought up the SBA loans, I'd love to get on that topic because I just made some content about either buying versus building a business. And, there's a lot of gurus out there now that are talking about, oh, it's so simple. You just go buy a boring business and, you just get an SBA loan. And it's like, 1, 2, 3, you just put someone in there to run it. You don't have to show up. You could be, sipping Mai Tais, and it's so not true. Like, that's not how it works. It's, I've operated a lot of different companies and, you could get it to that point eventually, but that's not typically how it starts off, especially if you're getting an SBA loan. So let's talk a little about SBA loans. I mean, have you come across a lot of clients that are in trouble because maybe they have this SBA loan, now it's choking them to the point where they can't grow and they can't hire the right people? Can you hit on that a little bit?
That's a high percentage of the clients that come to me have an SBA loan. I'm thinking of like 5 that are coming through my head in the last year, like almost immediately. And one in particular is sticking out. He bought a business. It was doing about, I'm going to call it profit. So I'm going to skip by the fancy words of EBITDA and SDE, which are fancy words and do have a specific meaning. But just for the sake of this conversation, I'm going to say had about $750K of profit or cash flow, I'll say. And he now 6 months later because he started a service department, he decided he thought he could make some money there by adding a service department. It was a plumbing company. And then he also went out and bought a bunch of equipment. It's now to the tune of on a run rate of $350,000. And now, to your point, he's servicing, half the money, half of that cash flow was triggered for the SBA. Well, now he's absorbing all his cash flow, not really making any money. He's kind of made there's a couple topics here. One is, if you do acquire a business, don't try to make a bunch of changes in the first year. Just understand the business, get to know it, and then figure your strategy after that. And then the other thing is, to your point, like you've got this high level of debt. And he wasn't experienced, by the way, he didn't have a lot of experience in this area. Now he's kind of in a bad situation and trying to work him out of it. And we're getting there. But to answer your question, any debt, and SBA in particular, could suck your cash flow if you are not careful.
Yeah, no, 100%. And it's tied to a personal guarantee. That's the scary part about it, where other types of debt you could get that, don't require a personal guarantee. It's scary, because a personal guarantee, you're caught for life. You know what I mean? Like they're coming for you, like until that thing is paid off, essentially, right? So, and I have a client right now where I'm like, listen, if I was you, I would take every dollar additional that you're getting and just put it towards this like personal guarantee SBA loan, because that should be your highest priority. Do you agree? Like if someone has an SBA?
Yeah, there's a lot of really good success stories with SBA loans too. So, I think it depends what the person's situation is and where they stand. If someone knows how to run a business
and they could grow the company.
Yes. It's a great deal. It's a great way to get in, right?
I agree too. But if you're going to buy it and then just stay steady, like I feel like, I don't know, like I feel like you have to have a plan to grow it. Otherwise it could be, like you said, you could slide back and now all of a sudden it's just sucking all your cash. So it's like, you have to have that growth mentality, in my opinion, if you're going to take on that type of loan. Because if you buy a business, like you said, 700,000 in profit, and now you double that over a 24-month period, well, servicing that debt's going to be easy. You know what I mean? But if you don't have that growth mindset, you can get yourself in trouble with those SBA loans,
Or your growth mindset isn't really well thought out in terms of your plan. And you think, I'm going to just add a service department, and that means I'm going to add a $100,000 service manager. But, oh, by the way, I have no service business yet, and I think I'm going to build it, but it's not working out like I planned. You're hurting yourself. So to your point, I totally agree. And onto that note of personal guarantee, I think it's a necessary evil, because a lot of times credit lines, they'll make you do personal guarantees. I think they're okay, but I will tell you this, you have to proceed cautiously, because I've seen a lot of really a lot of nightmare situations. I had a client many years come to me. She had just bought a business and she used her 401k to pay down for the down payment. So she took all her money out of her 4K at 1K. It was like, I think it was like $350,000. Did a down payment. 6 months later, she was selling the business back to the owner. She was losing money. She was selling it for pennies on the dollar and walking from it. And I think I've heard that story probably 20 times in my career, where people sell it back to the owner at a huge discount, or they just walk entirely because they have no reserves. They have no cash. They didn't really have a plan. They didn't do their proper due diligence. There's a lot of different topics in there, but I do agree with you. Any type of debt or loan you're going to take on, if you don't have a plan, just be careful.
Yeah. And is that something that you help your clients with, is putting that plan together on, maybe even, like you said, try to not restructure, but figure out a way to maybe improve the pricing or, decrease the expenses. You help them put a plan together to try to manage that debt.
Yeah. So usually if I start a new engagement, the first thing I'm doing is looking at a break even point and then saying, what do you want your profit margin to be? Or what do you think it is?
Yep.
And they'll say, I want 20% or 25. And then we'll do that exercise. And it's like, okay, so you should be billing $600 an hour. Is that what you're doing? Oh no, I thought it was $200 an hour, $300 an hour. And so that's an awakening. And then you have to decide, how do you manage that? Is that a pricing issue? Which truthfully, Teddy, most of the time it is.
Yep.
Is the product just isn't being priced. And a lot of times as business owners, it's just funny. Literally the meeting before this, I have a client that's buying a business. It's a plumbing business. And we were going over, I wanted to show her the detail of this plumbing business that we're buying, the invoices of what this individual's charging out. And they're really high amounts according to her. She's like, oh, I can't believe they're charging that much. And I said, this is the market. Almost in her mind, it was like in her mind, she was overcharging.
Taking advantage.
Taking advantage. We need to move the price on. I'm all, no, you can't think that way.
Mm-hmm.
This is the market. This is the right pricing. Trust me on this. It's been working for this guy for years. I'm trying not to say the names accidentally for privacy, but that's the mentality of a typical owner, is that we way underprice ourselves and feel like there's no room at all for increase because the shop down the block is charging a certain amount, or we think they are. It's oftentimes 90%, I would argue, is not true. You can charge more.
Yeah.
What's your opinion?
No, that's exactly what I've seen in my experience. Is you're just not charging enough, and people aren't creative as far as when it comes to the pricing models. I mean, that's one of the things I did in my business, was change the entire industry. I mean, nobody was doing flat rate pricing. Nobody. I mean, even my partner thought I was absolutely insane, fought me the whole way, but I was able to prove to him, and I showed him after I measured it and, proved that it was going to be profitable over a long time frame. And, you got to think outside the box sometimes as a business owner, right? Like, what can you offer in the market that no one else is offering? So you can't even be compared to what they're offering. It's like, oh, I can't even go price shop this because no one else is offering it. Those are the things that I try to help my clients with. But yeah, increasing the prices is 100%. Almost 100% of the time it has to happen. Like, they're just not charging you because they don't understand the numbers. They don't understand what even their overhead is, and what the gross profit margin should be. And it's very expensive to run a business. People don't take into account every type of expense, and then all the unknowns. A piece of equipment breaks down, you blow a tire, it's $800. Like, it's all these little things that pop up that it's extremely expensive to operate a small business today with all these. I mean, insurance. I mean, it's just astronomical. Everything.
Just keeps, the list goes on and on.
Yeah, I mean, you just have to charge accordingly, because you have to be able, and also you have to be able to take care of your people, right? So if you're not paying your people the right rate, they're not going to stick around, and they get a job anywhere in today's market. So you have to be able to take care of your people. Well, how do you do that? You got to charge more so you can take care of your people, so they can also give your clients good service.
Yeah, I want to touch on something you said was really cool. Your flat rate pricing, which was for your industry totally novel, genius as far as I'm concerned. We had this discussion. I recently spoke with a lady named Danielle Putman. She has a new flat rate, and her whole business is helping contractors in the trades come up with flat rate pricing.
Oh, that's
and
cool.
It was really cool. So her theory is, or the psychology of it, she calls it 5-point pricing. You give 5 different prices. Most people psychologically, there's some study that they cancel out the highest and the lowest. So that then leaves 3, and they usually pick the middle. And to your point about creativity, I loved listening to her, because she was coming up with all these different ideas that they have in terms of how they can build differences into the packages. And how we are, like, as consumers, like, a lot of times we go, oh, I want that. Okay, I'll pay the most, or whatever.
Yeah.
And it's easy for us to justify it. So I thought, to your point, like, creativity is such a big part of how you price things. And I think I think we get so short-sighted and we get so used to doing the same thing that we forget there's value in what we're doing and little things that we can add.
Yeah, no, 100%. I mean, and you really got to start off by studying your clients, right? And your customers. What are their pain points, right? And I knew in my industry, there's certain pain points where, speed was one of them, was because, people were selling their house. So it's like you had to get it done quick. So I came up with just one thing that I came up with. It's like, all right, well, typical turnaround time for a report, we have to write a 300-page report from the DEP. It had to get reviewed by the state. It was 300 pages. So every client that had a leaking tank needed this. Well, and industry standard for 35, 40 years was, oh, well, that's 8 weeks to get that report. And I'm like, okay, so I dialed it down. I called all my vendors that I needed in order to put that report together because I needed lab reports. I needed my subsurface evaluator. So I was like, how quickly? I'm talking, what's the fastest I don't care if I got to pay you a little bit more money. How quickly can you turn this around? I came up with a price where I was able to charge my clients. It was a rush fee, $995. My cost to get this done was like $150. So boom, it's all right to the bottom line. That just helps improve your profit now. And my customers loved it. They're like, wait, you're going to get this to me in 10 business days? It usually takes 8 weeks. Like, yeah, where do I sign up? I probably could have got $2,000 for it, and the people were so it's like, just think outside the box and offer things that no one else and nobody in the industry was offering a rush fee like that. So it's little things like that. And then those numbers, like I said, they fall right to the bottom line. And when I sold, I was about 43% EBITDA, which is unheard of in home services,
Wow. Yeah, that is pretty good. And I think on that same topic, as owners, we get so immersed in the day-to-day of the business that we never have time to do this creative stuff. Yes. And I think people like you, me, CMOs, those are chief marketing officers on a fractional basis. Those types of people like us in various industries, maybe even a fractional operational person, can be so valuable to the business as a whole because they're going to come in with fresh perspectives. They're going to come in with experience of doing things and hopefully slow down that owner to think about some of these things and to implement it in their business. And so I'm a big advocate, even in my own business, was bringing in external sources that have fresh, unique ways of how they approach their own success, proven experience. I think that's really important too. And can implement that. Of course, as the owner, you got to decide what fits for your business, but at least it gives you a new angle and a way to approach things rather than getting so stuck in the daily grind. It's like you're at a wall one inch away. You're just so close to it. You just don't see it all.
I agree. And yeah, you have to have the right advisors and the right consultants. If you can't do it all yourself. I mean, a lot of guys try to, and I did my first 15 years. And I thought, oh, entrepreneurship is so lonely. I wish it shouldn't have to be. There are so many industry groups out there now specific to your industry. There's guys like Tyler you could tap into, you could tap into me. I mean, reach out to me. I mean, I just love talking business with anybody and about their business model and think about, think outside the box and how we can improve different operational things. I mean, I had a client that they came to me, so it was taking their bookkeeper 4 hours to do bookkeeping. Now, this was a small business. They had, I think, 8 people on the payroll. I'm like, 4 hours? I'm like, listen, this is no way. I'm like, let me come there. I'll sit with you, and then I'll see, it's a local client. I went and sat there for 4 hours, watched them do the payroll. Thought about it. I'm like, all right, here's how we're going to do it. So I gave them a new process, and now it's 45 minutes. The payroll is done, and they do it weekly. So that's a savings. Now you're paying someone to sit there. She couldn't answer the phone because she was so dialed in on the payroll, So it's like just thinking outside the box and these little efficiencies. I mean, those are things I love, helping my clients with for sure.
Huge. I got one question for you. I know I'm probably not supposed to do this, but what do you feel about, like, do you ever have a client come to you where maybe they're too far gone, for lack of better words, or you feel like, man, I just can't turn this around? Or do you always feel like you can always turn it around? Because I had a conversation with a guy today about taking on a client, and he said, man, this I just can't turn this around. So I'm just curious, where do you stand on that?
I mean, so the clients that I've dealt with, I just thinking top of mind with the most recent one, they had a company with 4 divisions, and the one division was losing a lot of money and the other division was making a lot of money. So, I had that hard conversation with them. Like, we have to change the price. It came down to pricing once again. I mean, this is they did public bid work. So I had to sit with them and say, listen, you're bidding. I understand you got to have tight margins because you're bidding on an open public market. Everyone's got to be real tight, but you have to be able to hit this number. If you don't hit it, like, you just shouldn't even take these jobs. So I mean, to answer your question, I had that hard conversation with them. Like, if you can't get here, you should just shut it down. I mean, I hate to say it. They've been doing it for so many years, but it doesn't make any sense to stay in business. You're literally sucking money off of the other business, which the other company was doing like $1 million in profit. This business was losing 700,000. I'm like, you're basically what are you doing? Like, it doesn't make any sense. So yeah, I mean, sometimes you have to make those hard decisions. I mean, I had to do it with my own self, like going through it where it's like, hey, I got to pull the plug on this. Like it's not savable, and those are tough decisions and conversations to have with clients for sure.
Yeah, it's a hard conversation for sure. I would do the same thing as you. I mean, I'm kind of in the same school as you, but it's arguably one of the most difficult conversations because it's their baby oftentimes.
Yes.
And you're basically saying, hey, walk from your baby.
Yep. Yeah. Which is not easy. It's definitely not easy. Now, as far as like your clients, I mean, when you're dealing with clients that are financial like hardship situation, let's call it. I mean, what are you typically seeing? Which is the first thing that you're trying to tackle? What do you think is like the lowest hanging fruit that it's like, hey, if we do this should help start to turn the ship? Because it's not always fast. Usually, sometimes it's it takes a long time to turn that ship around. So, what's the lowest hanging fruit that you're typically seeing?
Yeah, it'll depend on the client, but if they have AR, that would definitely be the first thing we would look at is can we stimulate collections any faster? Are they keeping AR clean? You'd be amazed at how many times, or maybe you wouldn't be amazed.
No, yeah.
So many times clients, they just have a really messy AR aging, and that's half the problem. So AR would be a low hanging fruit. I would say. I don't generally defer vendors. In vendor payables usually aren't even really a big issue. But if that would be another thing I would look at. I would say you got to go down operating expenses and try to get I look at a general percentage. I like operating around 30%. Under would be ideal. Some businesses might be a little over, so it depends. But if I see operating's like 45% or 40, which I have seen that, I'm looking down that list, like what's triggering that. And a lot of times, to your point, there's just too many staff. Like it's just over time, we've got, 7 admin people and, seven technicians, for example. It's like that ratio doesn't make sense. And so it kind of varies. I think pricing is always a quick one too, that you can, I don't know if it's a quick one, but it's easy to implement if you can get the owner on board. The pricing needs to be adjusted.
Yeah, 100%. I mean, and hitting on that, it's the admin stuff. So I have a client right now. So this is another, going back to hard conversations. They've had these employees for 20 years and they've gotten raises every year. So now they're, in my opinion, they're not at market rate, and it's not my opinion, it's fact. It's like, listen, you could get somebody, and I hate to say this because these are people and you don't want them to lose their job, but it's like, now he's gotten to this point where his overhead's so bloated because and that's great that his employees have been faithful and with him for all this time, but now he's in trouble because he's, he's bloated. So what are you doing? What would be your recommendation in that situation? Because that's a tough one.
I mean, the question I always ask is I say, hey, are you running a nonprofit? No, we're not. I mean, I don't ask that seriously, but it's kind of really what they're doing in effect. And then the second question is, you need to understand if you're running at a loss and you go out of business, you're the one left holding the bag.
And everybody's losing their job.
You're using your money, your personal money, to pay those salaries. It's not the business is paying for it, because if you're at a loss, it's coming from somewhere. It's coming from your own personal money, essentially. And so I just kind of have that discussion, and they have to, usually if someone's in that situation, my experience is they're exhausted. Like they're just tired of losing money. They're tired of the situation. They're working really hard. And honestly, although I wouldn't normally advocate this, if a team was overcompensated, I think what I would do is sit down. We'd come up with a plan for like some performance-based pay, and you're going to lose 1 or 2 people because they're going to be mad, but the rest of the group is going to get right-sized in terms of their pay. And as long as they're hitting certain metrics for us to be profitable, they're going to be whole. And I think you just sometimes, if you're in a crisis mode or you're in a losing mode, you have to make tough decisions. They may not be popular. Not everybody's going to like it, but at the end of the day, that owner is the one that's burdening not just the stress, but the loss if things don't work out, or debt is going up and they're responsible for that debt in the form of a personal guarantee. So that's how I would approach it. It'd be a tough conversation. I'm making it sound easy. It's not easy. No. It's very emotional and it hurts. And it usually, honestly, at least for me, Teddy, is probably 3 or 4 meetings in terms of first absorb the idea. then come back and talk about all the objections that you have about the idea, and then probably get to a point of, okay, how do we implement this?
Yeah. That's exactly that's playbook I run. I mean, I just went through this, and I've done it in my own business too, but I've done it for some of my clients. I mean, yeah, you have to restructure the payment. You have to structure the pay, and you have to, and what I try to do is I try to make it so if the company performs at a certain level with hitting certain KPIs, they'll actually get more. So let's say hypothetically they were getting $100,000 a year salary, which this is an exact situation I had. A sales rep who's getting $100,000 salary, and I'm like, this is just not, you're an order taker. I'm sorry to say that, but that's what you are. You're not generating your own leads, and we don't have the revenue to pay an order taker $100,000 a year. So here's what we did: we restructured it, but I gave them an incentive to say, listen, if you bring in your own leads, you generate your own leads, I'll pay you a higher commission on those. And if you do that, I mean, you could bring in 150 grand a year, so, and that was one of the things we had to do. So restructuring, some comp that way, but always tying it to performance, I think is crucial, because otherwise, yeah, when I tell my clients too, is like, yeah, you don't want to have this conversation, but if everyone could lose their job. If you continue to overpay these people, it's not, you got to think about everybody here, all the employees, right? So yeah, those are never easy conversations to have.
And the owner's left holding the bag.
Yes.
I mean, that's the other part of it that I always try to remind them. I mean, if they're losing money, that's essentially the owner is paying those higher salaries out of their own pocket. I mean, it's not even profit; it's out of their own past earnings that they're entitled to. And so it usually will click for people, but I agree with you. Pay for performance and tough conversations about whether people are a right fit. They're very emotional and they're very charged. And so I try to, and it sounds like you do too, there's the logical part, which sometimes doesn't totally immediately resonate with people because they're so tied into the emotional part. So you start with the emotional part, get them comfortable, understand, connect, and then get a little deeper into these are business decisions that you have to decide what your goals are and whether you want to survive. And you're right, you got to protect the whole team, not just a couple people.
Yeah. 100%. Yeah. I mean, they're definitely hard decisions, and that's part of business ownership. You're constantly solving problems and making hard decisions. I mean, if you want to own a business, you better get used to it, because that's how you progress and that's how you succeed at business ownership. I'd like to talk a little bit about, change subject here. Let's talk about net profit, because as you know, I mean, everybody and anybody who's online, everyone likes to talk about and throw numbers around for top line revenue, right? And for me, and listen, for the first 15 years, I chased top line revenue in every direction I could. And what I learned was that's not how to run a business, right? What matters most is what you keep, right? What you take home. So let's talk about net profit. Let's talk about targets, where they should be in home services. And this probably varies too, depending on the industry. So you want to hit on that a little bit?
Yeah, I mean, I'd say just for a general home service business, I would probably say 20% is and that would be my general percentage anyway, is really what I'm talking to a client of where I'd like them to be at. Now, there's a lot of shades of gray in there. Definitely 25 is doable and achievable. I do have several clients that are doing that. If a client hasn't really dialed in their business, they're going to be hard getting to 20. I think 15 is what most clients are coming to me with, needing help, maybe a little bit lower, maybe a little bit higher, but somewhere in there. I guarantee there's a chance to optimize that up to 20. If they're 10 or under, I'm worried. Unless it's a commercial, they're not doing home services. Commercial's got very thin margins. 10's doable, but under 10, I start getting worried, and 5 is scary. And obviously, if you're at a loss, that's super scary, and you need some significant adjustments. So 20, I would say, is the baseline. What are your thoughts?
Yeah, no, I agree 100%. I came from a very niche industry, so my profit margins were higher than normal, but they weren't always that way. They started getting that way after I changed the pricing models around the flat rate pricing, the fixed cost remediations, the guarantees, the rush service, all these fees I came up with, that helped with that profit margins. I mean, like I said, that money just fell to the bottom line, but typically in my industry, I would say probably 20 to 25% is normal. Okay. And then, what I'm finding from other clients that I've consulted with, I would say, 15%. You're probably right on the money right there. And then there's some that, there's guys that are 10 to 12 and they're happy with that. And I'm like, that's a little tight, and I'd like to see that come up a little bit. I always try to, to help them. And again, a lot of times it just comes down to pricing. They're just not pricing and they don't think they could charge that. And, that's part of the issue too. There's such a range in what the competitors are charging. You got some PE companies that are charging astronomical numbers, and then you got some Chuck in a truck who's charging basically nothing, because he don't have any overhead except for himself. So he's you know what I mean. So he's carrying very little insurance. So it gets difficult with the pricing, but that's what I see.
One thing I want to just drive home, going back to that break even analysis though, and then throwing what you want to make in profit on top of that break even analysis, that really doesn't lie. Like as long as you calculate your overhead correctly, and then you factor in your debt service and you factor in all your numbers, and then you throw on whatever net profit you have, it doesn't lie. It tells you what your hourly rate should be. And then you know exactly where you're at or where you're not at in terms of, what you want for a bottom line. And I will tell you, to your point, like, probably 100% of the time, I don't think I've had someone come to me where what they thought their hourly rate and what the actual competition showed matched. They were always they thought their hourly rate was a lot lower with profit built in than what it actually was. And so, I mean, that just supports that pricing really is one thing you need to really be looking at high on your list if you have a profit issue.
Yeah. Here's a very, I guess, a targeted question, essentially. So you're starting a brand new business. Let's just say hypothetically, you're starting a brand new company and you kind of know what your initial overhead is going to be. Let's just say hypothetically that overhead is going to be 30 grand and this is a project-based business. How do you work that into your pricing? Because you're not going to have jobs every day, right? So typically when you look at overhead, what I do is I usually look and say, all right, well, there's 20 working days if you work 5 days a week, and you divide it over, you come up with like a daily rate for your overhead and you try to use that number to kind of factor in, right, to cover your overhead. Well, how would you suggest someone do it in a brand new business if they're just starting out to get their pricing right, so they're not like trying to cover all their overhead in 3 jobs because maybe they only have 3 or 4 jobs that month? So what's your suggestion there in that situation?
Yeah, that's a great question. It's a tough one. I need to think about it. I mean, my first thought before you said it was like some type of daily rate that I would be trying to build in to make sure I'm covering it. I think we both know though too, starting a business, you got to have a certain amount of cash reserves for the unknown, right? Like even if we runway. Yeah, we just don't have the history yet and I will tell you one thing that comes to mind. Chris Lee, I had on my show, and he sold a roofing business. Solar business. It was 9 figures.
Yes,
He sold it for. And what I loved, he had told me, he's like, man, I'm targeting 60% margins, and this is how I do it. And he kind of talked through it. And it was legit. I mean, it makes sense why he got such a great multiple. And so I think you kind of have to be aggressive in your pricing, even starting out, because I think what I find is once we fall into our ways, it's kind of like the guy that gave guy or girl, depending on the owner, that kept giving raises every year. We fall into our ways of doing things, and then it's just, this is the way we've always done it. And so I would like to, if I was starting a new business, I would be aggressive in my pricing, and I would be okay with probably losing a couple deals that didn't fit into what I want to do. Now, obviously, if after a certain population of deals I wasn't closing, I try to figure out, is that my close process or is that the pricing? Because most of the time it's the close process. I had a client that had a really low conversion rate, and literally they changed their process from they would not leave the home without getting some type of action item, whether that be like a membership and they would actually talk to the owner. So they wouldn't just, sometimes we'll leave a note and leave because you want to end the day or whatever. They would get some action talking directly with the owner, and their conversion rate like went up dramatically just by doing that little tweak. So a lot of times it's just our close process too. It's not pricing. We think it's pricing, but it's our close process.
Yeah, no, I agree 100%. I made some content around the sales process and how you can improve your closing rate and it doesn't cost any money. It's just by tweaking your process. And how do you make it frictionless, right? Because everybody's used to Amazon, right? They want everything instantly, 2 hours, next day. And you have to think the same way, even as a contractor, because your competition, what I'm seeing is a lot of these guys, they call you back in a couple of days, or you get a voicemail and it takes days to get you a proposal. Like, so if you could just speed up and make it more efficient, just that improving that process alone can improve your closing percentage. So I agree 100%. I mean, and as far as the pricing goes, yeah, I mean, that's how I would track it. Is exactly how I would do it. I would track my closing percentage, and then I would see like, all right, if my closing rate's super low, then all right, well, maybe we have to lower the prices a little bit, but only up to a certain level. Like you can't just keep lowering it because you're like, oh, my closing, because then maybe it is the sales process, maybe it's you, you're the salesman. You know what I mean? So like you got to think of all these things and track everything, and that's like my main thing is like you got to track everything, and you have to improve it, and you can only improve it if you're tracking it, right?
Right. And I think the other thing you just brought up, great point. I think people feel like when they change their prices, it's like absolute. And it's like, oh my gosh, I
Yeah,
have to
no,
charge
exactly.
20%. No, I mean,
No.
you can test it and change it
Yes.
again. I mean, like
Yes.
there are no rules. Like
Yes.
nobody's going to catch you.
Well, that's exactly it. And that's exactly what I used to tell my partner. I'm like, listen, let's run this for 30 days. It's a promotion. Let's see what happens. I mean, I went as far as saying, and he said I was completely insane, but I'm like, I think we could remove oil tanks for free. Let's offer free oil tank removals. He was like, what? You can't do that. I'm like, but listen, how many people are going to hire us to pull the oil tank for free? Now, obviously I was trying to work in there where it's like, if the tank leaked, you got to be ready to do the remediation. If you're not, we're not just coming to pull your oil tank. Because in my business, I looked at oil tank removals as loss leaders, right? So you had to find more oil tanks to remove in order to find more tanks that leaked, and that's where all the profit was. So I'm like, all right, well, if I offer free tank removals, and these people were actually selling their house, so they have to clean it up. It's not like we could like pull their tank and then they could say, yeah, no, we're not going to do the cleanup. And so I had this whole idea, and he just would not let me test it. I'm like, let me test it. I'm like, I guarantee we'll make money doing it. He wouldn't let me pull the trigger on that one, but I got him to agree to the flat rate pricing, which was nobody was doing in the industry. We included the permits, we included everything. And he bitched about it for the first 90 days until he saw all the revenue we were coming in, because as I pulled more tanks, we were just finding all these leakers and the money just start pouring in.
When you reflect on that, do you think that friction between you and him, would you call that a healthy friction? And would you encourage that in a business? One person that's kind of on one side of the fence and the other's on the other, and they're kind of pulling towards the middle. What are your thoughts around that?
Well, I'll tell you what, I was, I grew up and I went to work for my father. So, my first experience in business was, I wouldn't say a partnership because I didn't own the business. I wasn't a partner with my father. I was an employee for him. And then him and I separated because it was tough. He was old school. I was new school, had all his ideas, and, we went our several ways. And then for basically 10 years, I was the only owner. So I had nobody to answer to, no partners. And then when I restructured, I had to bring some equity partners in. And I'll tell you what, that was one of the main reasons why I wanted to get out. It was because of, having partners it's not easy. It is not easy for sure. It's tough to work with partners. That's all I could say. But, I wouldn't say it was unhealthy because, for me, I'm the kind of, and before all this, I was like, go, top line revenue. And this guy was more like pulling me back, which I kind of needed back then. You know what I mean? So once we restructured everything, he was still trying to keep me kind of hold me back, but I was so focused, and I'm like, no, this is going to work. We're going to try this, we're going to try that, and had all his ideas. And, at the end of the day, they worked, and we really just blew that business up fast. It was exciting, but it's tough. It's tough having partners.
Yeah, I think partnerships I'm not a big fan of. I think having someone within your organization that gives you that healthy friction, especially if you're a big idea thinker, and I'm not saying you specifically, but the owner's a big idea thinker, because a lot of times owners are visionaries and they're entrepreneurs, and they'll tend to have the next idea in their head before they've stopped one. So it's kind of good to get that friction of slow down, think about this, of someone that you respect and value. Yeah. But I could also, in a partnership, I'm not so sure how well that dynamic would work. In fact, partnerships oftentimes don't. Yep. So I could see how that might not be ideal.
Well, I think that's, coming right back to you. That's why I think it's like having guys like you that come in on a fractional basis, right? So now you have experts that are in different fields. So like you were saying before, a fractional CMO, a fractional CFO, you're bringing in these experts that have their experience in certain areas of the business. Then 100%, they could bring that expertise to you, as opposed to if you have a partner that, and this is kind of was my issue, my partner, he never ran a business at the size we were at that point. And, so it was tough. So I'm like, not that I don't want to listen to you. It's like, I was educating myself. I was listening to podcasts. I was reading books, and I would get these ideas. And I'm like, that's where I came up with the flat rate pricing, was educating myself about this stuff. And I would bring it back to my company and be like, all right, let's implement this. And then he would refuse to read a book or listen to a podcast or educate himself. And I'm like, this is frustrating to me. Like, you're my partner. We should be listening to the stuff together. Let's educate ourselves together. So yeah, bringing in a guy like you, who's an expert in that field, and you're not an owner. You're just like, but give me the feedback, tell me and guide me. I think that's a lot healthier in my opinion.
For sure. And it's not, if I really appreciate you saying that, but there's business advisors like you, there's fractional CMOs on the marketing side, there's fractional operating people on the operating side. So regardless of which discipline it is, having those types of advisors with proven experience, I think can just add a whole new angle and a healthy. I used to like in my sales meetings, I kind of encouraged a level of friction because I felt like it was healthy, as long as it didn't get out of control, of course, and respect was always there. But it created this dynamic where more got done, is what I felt like.
Yeah, no, and I think it's good. It's healthy banter going back and forth, because you got to kick ideas around. You can't just run in every direction or every idea you have. So it's nice to have that back and forth for sure. Yeah, no, absolutely. And you can find experts in anything. I mean, depending on where you are in your business life. I mean, if you're getting ready to exit, there's guys that specialize in exit planning, right? That could come in and help you. And you want to build a value of your business. Well, there's guys out there that can help you with that. So yeah, you just find the right people for the right time where you need them. And having a guy like Tyler on your team, I think, is amazing, because you come in. What now? You want to explain a little bit how your services work? Is it on a monthly basis, quarterly basis? What do you? How do you typically work?
Yeah, so it kind of depends on the client, but most of my clients are monthly. I'll usually interface. I'll become part of their leadership team, usually, is the way it works. And I'll work with, typically it's the owner, but it could be the leadership team as a whole, depending on their size. We'll go over once a month their financials. Oftentimes there'll be a forecast, a lot of special projects usually under just those two items. So, for example, I'm meeting with a new client on Tuesday. We're going over break even. He wants to adjust his budget on his marketing spend. So he wants to create a budget, and then he wants to decide what would be adequate spending for that and what type of return he should be looking for, as well as a few other issues that were one related to debt and just what he should be thinking about in terms of debt service and adding more equipment. And home services equipment is a big part, vehicles in particular. Do you lease, do you buy? Either way, it's going to suck up some of your cash flow you have. So you have to kind of plan for how does that affect. If you're going to get a vehicle, you're probably going to add a technician. You may need more tools. So all that stuff becomes part of discussions, and whether it be forecasting or just planning in general.
Yeah. Yeah. Forecasting is huge. I mean, that's one of the things that, you gotta be able to do. And I feel like some of the clients I've sat with are like, oh, it's not possible to forecast in my business because, it's so up and down and we don't know what's going to, if we're going to win the bid or whatever's going to happen. So how do you deal with clients in that situation where maybe they're like, maybe they're doing public bid work, or maybe they just have sporadic jobs? Like, how do you help them with forecasting in that situation?
Yeah, forecasting, we got to remember it's, I always tell this to clients, this is not crystal ball stuff. Like, we don't know exactly what will happen in the future, but to the best that we can figure out what we think things will look like. And a forecast, just by its nature, is something that you're going to update. Typically, oftentimes it's monthly, based on your pipeline or based on the conditions of the business. So that's really what it is. It's a guide. It's not an exact map that's going to take you where you want to go. But without it, it's things you're not thinking about. I can't tell you how many times, Teddy, when I do a forecast and you start to talk about, oh yeah, I want to hire another technician. And then you go, okay, well then you got to factor in the cost of the vehicle and the debt service for that. And maybe some equipment and maybe inventory for their truck. And you start to build all that in, and they're like, oh,
payroll taxes, all that.
Yeah. Payroll tax, health insurance.
Yeah, exactly.
You start throwing everything in, and then it's like, oh, I didn't think of any of that. You're right. And oh, by the way, it might take them 2 or 3 months to get really up to speed, or a month, or whatever it is. So that means you might be a little cash flow negative on them for a couple months, and you got to bake that into the pricing. And then, you got this commercial project you decide to take on, and it's going to be net 60 terms, which you don't normally do to commercial work. And all of a sudden you're going to have to advance a bunch of equipment, and you're not getting it. It's just all these different things. I could go on, but we don't usually think about these things. We just do them, and then we bear with the ramifications if they aren't a good decision.
Yeah. Yeah, I see that so much. I mean, and that's why it's so important to have to have a guy like Tyler on your team, man. You got to have someone that loves numbers, understands them, crunches them, and then brings them to you. That's why it's very helpful to have somebody who is experienced like you, Tyler, on their team, because numbers are everything. Like we said in the beginning, numbers are everything. You got to know your numbers. You have to understand them. And as a business owner, I mean, you should understand them at a level that is more than just like, hey, this is what my accountant told me, I'm good. Like I made content around like just even your profit margins. Like a lot of guys will say, well, my profits, I'm at 18, 20%. I'm like, well, how much are you paying yourself? Well, I'm only paying myself 50 grand. I'm like, well, your profit's not really there. You know what I mean? Like you're underpaying yourself. Like let's adjust it. Now let's look at you're really only at, 11%. So,
Yeah.
You probably see the same thing, right?
To me, it's like it's that guy that says, "Hey, my last stock pick, I made 300%,"
Yeah.
and then when you start talking about their stock picks, it turns out they lost the last 9 trades that they did, and this is the one they made money on. That's kind of the way it is when people talk about their business numbers. Been my experience. Is they'll tell you, hey, my revenue's $5 million a year. What they don't tell you, I'm fortunate that I get to see under the hood, and you do too.
Yep.
And you start to see the real story, and it's just not oftentimes as glamorous as it sounds. The numbers.
Yeah. Well, listen, that's why you got to have somebody like you on the team. And this is exciting, man. I think this is great. Is there anything else you'd like to add to the audience in reference to home service contractors and how maybe you give them any tips or tricks with their books or, just hit on that a little bit?
No, man. Only thing I guess I would add is I have watched a lot of your YouTube videos. In fact, I think it's one of the ways that we got connected. I think you're doing a great job with the YouTube videos, sharing really good knowledge, factual. We always got to be careful when we're following all these different advice on the YouTube and different various social media. A lot of times people really haven't done it. And I think you've done a great job of just actually factual, true information that people can trust, at least things that I've seen. So I just say, keep doing what you're doing. And I'm trying to do the same thing on I think a smaller level, but that's all I would really add.
No, I appreciate that a lot, Tyler. And you also have an awesome podcast, Profit and Grit, guys. You got to go check it out and let everybody know where they could reach you and contact you if they're interested in your services.
Yeah, so my website is cfomadeeasy.com. That's cfomadeeasy.com. My podcast, profitandgrit.com. I'm kind of like you, Teddy. I love talking with people. So people are welcome to reach out. I'm always happy to chat and just see what they're doing. And if there's some way I can help them, that's great. If I can refer them to someone that can help them, I'm always happy to do that too.
Awesome. Well, Tyler, I appreciate you coming on, and it was enjoyable, and I look forward to staying in contact with you for sure.
Thanks, Teddy. Really appreciate it. It was a blast talking with you.
All right, man. Take it easy.